This is the briefing for Friday, September 16th. Really, not a whole lot is happening in terms of the market price development in the market this week, at least for the last 3 days anyway. What we've had is we've had a move to the downside, then a rotation, a move to the downside, then a rotation, a move to the downside, and then a rotation. And while the opening volume is pretty good, volume for the rest of the day during the rotations really falls off, and it's really just not significant at all. Market breadth has been weak during the week. That has been very concerning. Although we're really just below important support areas that are now resistance. And if we do begin to see some type of an acceleration to the downside, I think we could see a pretty substantial move, at least at this point in time. You can see market breadth diverged slightly between here and here, between about 3 days ago and here, but it's not that big of a divergence that I would suggest that it suggests a strengthening within the market. We did have that divergence yesterday. You can see right through there, and it suggested the market was strengthening pretty significantly in yesterday's trading, but then it was eliminated with today's trading. Breadth was fairly negative right at the open and for most of the day, improving somewhat as we got this rotation up as the afternoon progressed. The same thing in the Qs. You can see that Qs had a divergence as well going into yesterday's trading. Really appeared that we're going to see some type of move back to the upside, but it was eliminated pretty significantly with today's breadth readings. Now, looking at the longer term aspect of this, now, those of you who remember, I think it was about 2 weeks ago, I talked about the fact that this appeared to be a head and shoulders top, and that it would not be a head and shoulders top until the neckline was broken. And the neckline, which came in right around the 410 area, which was a significant key reference area, was broken. And of course, we did get this move going all the way down to test the 390 area. Now, I discussed this in last night's briefing, and I want to say once again, I want to qualify this statement because people look at head and shoulders tops and they think, okay, that's a head and shoulders top, the market is going down. The problem with it is that it's not a head and shoulders top until the neckline is broken and the market goes down. Otherwise, it could be just a rotational pattern. So basically what we have here is we have somewhat of a shoulder here. I'm not even sure that's really, I can really call that a shoulder. We definitely have a head, and then we have another shoulder here. Neckline coming in at 390, and that was broken. It was broken yesterday, and it was broken in today's trading. Now we have closed significantly below this 390, 392 support area, which is now resistance, which opens up the potential to trade all the way down to the 370 area. So now that we're in this area of rotation here, it does open up the higher possibility that we're going to test the 370 area. If that's tested, I would venture to say that the probabilities are increasing that we're going to test the June 17th lows and that we're going to probably take those out. Now, in terms of this breakout, we do have a breakout below 390 in the spiders. It is often that you get a breakout and then a retest of the breakout area. So it would not surprise me to see on Monday the potential for us to retest 390 before we see some type of acceleration back to the downside, at least at this point in time. Now, on a daily basis, you can see the divergence in market breadth here, which is pretty significant. Between this day, this was, I guess, was Monday, and then Friday's trading. So we do have somewhat of a strengthening on a longer term basis of the indices. And I should point out that if this happens to be a head and shoulders top, then the projection for a break of the neckline for the spiders would be down to the 345 area, and that's a pretty significant move, meaning taking the fact that this low came in right at 362, so you're looking at about 20 points lower to the 345 area in the spiders. Now the Qs are basically the same situation. You can see they broke the 300 area. This was this high, or this upper extreme of this area of rotation, looking towards the 278 area as the next level of support. And once again, we can potentially anticipate a rotation back up to retest the breakout point and then another move back to the downside. In terms of the Russell really showing about the same thing, somewhat of a head and shoulders top. And I really, sometimes I think I shouldn't even talk about these things, but for the most part, if they are true, then if the neckline is broken, which it was almost broken in today's trading in the Russell, we should continue to expect some type of additional move to the downside. Important to all of this is the fact that the resistance now in the spiders is at the 390 area, which is extremely important. Support comes in at 370, and in the Qs, resistance is 300, and support comes in right around the 278 area. And in the Russell, resistance is basically 190, and support is the 178 area. Now, if you've noticed that I've flipped through these charts, the Russell, it really is holding up better than the other two indices. And that's typically a sign of that there's an intermarket divergence. We don't know how it's going to get rectified, but in the past, those of you who've listened to these briefings a long time ago, back in December of this year, I pointed out the fact that the Russell and the transports had started to break down before the other indices, and that typically was a sign that the other indices would follow, which is exactly what they did. Now, we have the Russell holding up better than the other indices, but the transports had a pretty bad day today with the FedEx announcement. So I'm not so sure that that's a really valid aspect. If it isn't a valid aspect, then it would suggest that the Russell has some catching up to do, because the next level of support is going to come in right around the 166 level. And you can see in these charts that these levels here, these support levels, are so close to the June 17th lows that the probabilities are going to be such that this June 17th low will likely get taken out. So in summary, where are we? Well, we have to expect the possibility that there could be a rotation back up to retest the breakout point, but I think that's a lower probability. I think that is, if we continue the move to the downside, then the next level of support is going to come in at 372 on the spiders, and that's going to open up the potential to test and take out the June 17th lows. And that's kind of where we are now. It's going to be important on any lower low next week, especially on Monday, that we see market breadth continuing to decline to support the move. The other aspect of this is that looking at volume, this is volume in the spiders. Volume fell off over the last couple days, so we're not seeing anything other than Monday's trading where we got a spike in volume that is significant. In the Qs, we had volume that ticked up slightly, but still nothing significant. Looking back at this decline, you can see how volume increased pretty dramatically. And the same thing in the Russell. Russell had a decent day in terms of volume, but it also has a buying candle or a buying wick on it, where you can see that selling brought it down below the 178 area, and then buyers stepped in and drove it back up. So really some conflicting information from the indices. Basically using the extremes of today in this rotation will give you good trade location for Monday, keeping in mind that any additional bad news that hits the market in terms of even the FedEx announcement is going to be a pretty big drag on pricing, and we're likely to see lower prices. Right now, the trend is down. Looking at where we are in terms of the longer term, you can see the trend is down, and then we had this recovery, and then of course it appears that we're headed lower. This is a weekly chart of the spiders. So going to be important next week, especially on Monday and Tuesday, to see where we go from here, whether we're going to have a retest of the breakout point, or whether we're headed down, and that can basically, the probabilities will increase. Trading above today's high, about the 386 area, would suggest a potential for a test of the breakout. Trading below today's low is going to suggest we're going down to test the lower support areas that I've talked about earlier in this briefing. Have a great weekend. I'll pick this back up on Monday.